Good morning, ladies and gentlemen. This is Clueless 8, and this is a pre-market AM report for Tuesday, August 4th, 2015. First of all, I'd like to extend a very, very warm welcome to all the new members and free trial subscribers who have migrated towards the Clueless 8 trading service on this platform. And I welcome everyone to participate, learn, and profit from the very unique, unorthodox, contrarian, and in many cases, um, a bit confusing way of looking at the markets. To get straight to the point here, the overall forecasts on market forecast and individual stock forecast overall on a track record of probably more than 70 or 80% of the time have been extremely accurate. That's the reason why you're listening to this video cast. Now, nobody in this business can be right 100% of the time. However, it is extremely important to keep in mind that if you have an overall understanding of the broader markets and look at the fishbowl from the outside in instead of the inside out, which generally is the case with 90% of traders and individual newsletters and trading services out there, then you have a very myopic and short-sighted view of what's going on, and you're always reactive and never proactive. My service in general is very much a proactive service. So at certain points of trade alerts and recommendations, it might not make sense, but the reality is, like the old saying goes, I'd like to get thanked after the trade is done while nobody's in it, or the least amount of people are in it. And like they say, the biggest compliment is for people to come and say, "Hey, that was a fantastic trade." Well, my goal is to have all of you involved in those particular type of trades, and therein lies my strength and my branding. Let's get straight to the charts here. One very important reminder before I do that, we have a service called Advanced Coaching Sessions, and that has been hugely helpful for a significant amount of members who have participated in it, for understanding all the different messages and all the different signals that are coming out when I post and place my trading charts out there. It's extremely important that all of you take a little bit of time, and it's a very, very little expense for the time that I put in. The average session lasts anywhere from 1 to 2 hours, and you pay for an hour. So the reality is that if you go through a couple of these group sessions, I believe that you will be in a far better shape to react, understand, and profit from these very precise charting that I place out there for all of you. So that offer is out there for everyone to take. Feel free to read the testimonials, like I always like to remind people, so that you get a little bit of a very accurate feedback on what people have experienced and what they've done with the coaching lessons. Anyway, let's start off by looking at behind you. You're looking at a chart of the Dow Jones Industrial Average. I'd like to remind specifically the new members that if you have a broader understanding of the overall market, and in many cases the reasons behind why things happen, um, you will have a far better chance of managing your own trades, which brings me to the term that I use all the time, which is MYOT. I cannot micromanage somebody's individual trading book, but I will certainly make sure that that they have an entry point, and I also put out there what my exit points are, but do not rely on me to give you an exit point every single fast moving individual stock that's out there. It's just not possible, and my service is not designed to do that. So that's a very important feature of my service, and do keep in mind that you have to manage your own trades, specifically in fast moving volatile markets. Anyway, so here's a chart of the Dow Jones Industrial Average behind you, and let's try to see what's going on. Now this chart is giving me a lot of different messages, mixed messages at the same time. You can use this. This is a daily chart, obviously. You can clearly see here that we are in powerful volatile trading range, and the reality is that volatility on a short-term basis is not quantifiable. In other words, do not expect 1 plus 1 equals 2 when you're dealing with the volatile market. There's a lot of traders, especially the new ones, who come in and they think, hey, if I buy it here and Clueless charts are showing this, it's going to get there. Well, believe me, it will get there. Okay, one with the other. Now, whether it be on the long side or the short side. But in order to get there, it's not going to follow a straight line up or down. There's a lot of zigzags along the way. And those are the zigzags known as volatility clusters that basically confuse and decimate traders because they don't quite understand why that is going on, despite the fact that I constantly keep on posting roadmaps and charts out there for them to stay on tracks. Extremely important that you understand the background of it so you can manage those trades and hold on to whatever destination point it's going to. I'd like to remind everyone also that that the choppiness in the market are constantly changing patterns. What would normally take days and weeks now happens in minutes and hours. So keep that in mind when you are an active trader. Okay, so saying all that, I'm going to give you a broader picture of what's going on. Let me get my drawing tool here. And what we are in right now is a very wide trading band. We're in a trading band here. As you know, this is an extremely powerful buffer zone where we have bounced off a few times, and that's around the 17,400 to the 17,500 level. Okay, right there. So the bottom, and this is the upper end of that range, which is around 17,000, let's call it 17,600 or something like that, right there. Okay, so this is what I'm talking about. Now, at any given point, this buffer zone, this red rectangle, can break. And if that breaks, you're going to see a very fast free fall, and that's only if we break convincingly below the 17,400 mark on the Dow Jones. We're going to fall very quickly into this particular free fall zone that's going to bring us down to 17,000. So 17,000 Dow is very much a possibility in my work that I'm doing here on the charts. All right, so just keep that in mind. Now, people get very dogmatic and they want to stick to their one notion that, hey, it's either a long or a short. But the reality of the thing is volatility dictates that you could be both long and short. And that's the reason why, things do what they do. Now, this particular zone that we have entered here, and I've mentioned that a few times over the past couple of days, is the same volatility cluster that you're seeing here, right there, which was in the first part of July. So the same volatility cluster, if it repeats itself, means that we're going to basically chop around like this, and at one point resolve, in my opinion, to the upside, which is not necessarily that we're going to go ahead and test the 18,300 level on the Dow Jones, but means that we are at least going to break out and test this downward sloping, this downtrend line. We have been rejected at this downtrend line a few times, as you know, and the most recent one was in July, and I was certainly short at that point. And it's difficult to convince new traders, or even traders in general, that when you're starting to move up like this, that the market can hit this this resistance level, specifically this very powerful downtrend line, and that we can come down. At that point, euphoria sets in, or mini euphoria, I should say. People get a little too giddy and happy, don't hold on to the trades, and they think, hey, if it's hit here, it's going to move all the way up, and it's going to hit, it's going to move, keep on moving higher. It doesn't work like that. The bottom line is that at this point, the best case scenario that I can see is around 18,100 to 18,200 on the Dow Jones, and that would be this dragon bullish pattern that we are, that we're looking at. So let me clean out these lines here and redraw them. So what we're talking about is a pattern symmetry that is replicating itself. This is the volatility cluster, and at this point, we have entered the same zone. So just because some market was down 100 points yesterday doesn't mean it's going to be down 100 points today. And just because we're going to be up, let's say we're up 50 or 60 or 100 points today, doesn't mean that's going to be the follow-through case going into tomorrow. So because of the volatility cluster, you have to be extremely cognizant of the fact that you have to manage your trades to a point where, in my opinion, you do not want to carry any overweighted positions in whatever stock you're talking, and especially on the trading side, overnight. Overnight position should be light. We have enough time to react during the day. 20 handles up or 20 points up on the S&P futures does not mean that we're going to have a great day, and 20 points down doesn't mean we're going to have a bad day. I have repeatedly shown that you can take advantage of those type of gap opens, higher or lower, and still makes a significant amount of money during the day. So if you to keep your trades close to the vest and react quicker, be flexible, take profits. Maybe a bit quicker than what you normally would. And even if you miss out the last 10 or 20% on, let's say, on a weekly options trade or whatever, don't worry about it. So the volatility cluster is what we're in right now, and I believe that as we get towards the latter part of the week, we're going to resolve ourselves where we're going to hit this downtrend line again. If we do overshoot, then the best I can see here is this move up here towards this secondary triple top, and that is around the 18,100 level. Now, once it hits here, you have a couple of scenarios that I'm painting out for you guys. You're going to come down. You're going to retest this downtrend line. If this market is in really strong shape, you're going to retest this downtrend line here, and then you're going to make it move up. And that would basically get up here. There's going to be a large amount of intense short covering, and you're going to hit the top of this rising wedge. This is the rising wedge that I'm talking about, the large rising wedge. Now, I always, for a lot of the new people who are listening to this, I always look at the October 15th lows for October 15th of 2014 lows as a pivotal low, and that's the reason why I draw the lines from that point. Now, that's one scenario. The second scenario is we break down, we test these downtrend lines, we test the first buffer zone, and then we make a move from here. We break through these, we test the secondary uptrend line right here, and then we make a move from here. Otherwise, we're going to fall straight through, test these lines, test this significant support, which is around 17,400, and hopefully we move up here on the bullish case, or we go straight down. At 17,000, whichever, these are all tactical trades here, we are going to hit a sharp bounce. That sharp bounce probably takes us back for 400 points, if not a humongous rally that's going to test this downtrend line again. And that's pretty much the roadmap that's going to happen in the month of August. So I'm just, just laying it out. Now, along the way, there's going to be enough zigzags and enough false breakouts and breakdowns. So my job is to keep people as connected as possible as the scenarios develop. We have about 3 minutes left on this video cast, so I'm going to quickly show you the S&P 500. You can clearly see here we're in a volatile range between 2140 and 2040. That's roughly about 100 points. And in between, you can basically play different time frames. The hourly time frames are showing a large stochastic oversold conditions, which as we very well know, gets resolved to the upside like that. And that means that we possibly can get to about 2120 or 2118 on the S&P. I play these back and forth, so just because I'm taking a hedge and on the VIX or calls and buying the S&P calls at the same time doesn't mean that I'm confused. I'm just a tactical clueless trader, and so far I've done well. Whatever the case, the best case scenario is we resolve ourselves at 2140, or we always have this level here to consider. So that's the picture that I'm seeing here on the S&P. Let me show you the Russell 2000, which I think is going to bounce pretty hard with oil, and the Russell on the daily. Let me see here. This is a picture of the Russell 2000 on the daily. All right, we have a sharp the Russell 2000 is moving on its own metrics. We have biotechs, a significant amount of biotechs. We have oil and energy, and oil, give or take about $1 or $2, is due for a significant bounce, and significant means maybe $4 or $5. So whichever the case, this is a pretty bullish picture. We played the shorts on that from Friday. We did very well with it, and at this point, it looks like the Russell 2000 wants to get up to is 1256. If we do break that, then we have a 1278, and of course the highs. Well, I'm not even going there towards the highs. In the meantime, these buffer zones are in play here. Any break below 1211, we're going to hit to is the 1200 level. Whichever the case, stay tuned on the Twitter real-time feed. I engage with people on a 24/7 basis as much as I can, and stay flexible. Thank you for listening.